Matthew Bryza, former White House and State Department official, joining us from Baku. Matthew, good to see you.
Great to be with you, Michelle. Thank you.
All right, so this move, which, it's a big deal, but as we were just discussing, it doesn't really change Russia's status in the universe of fuel. To see the EU take this move, though, does this cause Putin to rethink what he's doing at all, in your view? Or does this just make him dig in further?
Well, first of all, yeah, it is a gigantic step. I first came to Baku a quarter century ago to try to help do just what you were talking about, and Simon McGregor-Wood is talking about, get Europe to wean itself from dependence on Russian energy. And for the first decade, there was no receptivity. Now, Europe has not only started to reduce its dependence on Russian gas and oil, but this step today is huge. Does it change Putin's calculus? In the short run, probably not. As you suggest, his emotional response will be to dig in his heels. But also, as the package was explaining, this is a long-term conflict now in Ukraine. And, Russia had been earning close to $1 billion a day on its oil and natural gas exports. And as those revenues decrease, the ability to fund the war will also decrease. So I think in the long term, this will have a big impact on Putin's calculus. But today, yeah, he's probably digging in his heels.
So tell us about the amount currently. We've seen step-by-step taken by Europe and others over the last several weeks. What are Russia's revenues today, for example? Do you have a sense of what they're bringing in currently and what they plan to do to skirt this latest move?
Yeah, they've been bringing in, the estimates I've read, between 700 and 800 million euros per day. Wow. You compare that to the assistance that the U.S. and its allies have offered Ukraine, that figure dwarfs it. Even the $50 billion package that the Biden administration has just pledged to Ukraine, which is huge. In 2 months, Russia will have more revenues based on the current scheme. But now those revenues will decrease for Russia. Russia will be able to market its oil on the international market to other buyers for a while. Until or unless secondary sanctions are imposed, whereby the U.S. and European allies would apply sanctions to any company or country that was allowing Russian oil to be sold. Now, those secondary sanctions are not on the books yet; they're being discussed. But until then, Russia will be able to sell its oil elsewhere, but at a discount, at a big discount. So oil selling for it was around $112 per barrel Brent yesterday or the day before, and Russian oil was selling for about $93. So there's a $20 per barrel discount at least on Russian crude oil. That takes a bite out of Russian revenues, a serious bite, but still they are going to be able to keep selling their oil for a while. So they'll just sell it on the market.
So when you look at what oil is going to do price-wise and how it's going to affect consumers moving forward, as long as this war lasts, no one knows how long that will be, are we going to continue to see those prices climb, do you think? And, we had some comfort at Davos when the head of the IMF said she didn't see what's happening now leading to a global recession. That was somewhat comforting. You, though, knowing the oil market, do you feel otherwise? Do you believe that?
Yeah, that's very optimistic. What Madam Georgieva said. It's optimistic that there's not going to be a global recession. I mean, everybody seems to be, all the analysts seem to be predicting a U.S. recession coming up because inflation remains so high, and the Fed is going to tighten the money supply and interest rates increases that are almost likely always going to lead to an overshoot and a recession. So I hope she's right. But I think, I would put my money on oil prices staying high for quite a while, and natural gas prices, because there's going to be reduction in, well, first of all, there's still the problems with the logistics lines. Part of that is getting through the pandemic constraint on logistics and supply chains. But this too, there's going to be less Russian supply available, and that'll keep upward pressure on prices. However, what if Iran gets back into the JCPOA together with the U.S., then we'll see a lot of Iranian oil coming to the market. So as always with the oil market, there's so many unknowns.
Yes,
but I think I would put my money on higher prices.
A complex web. All right, Matthew, always great to talk to you.
Thanks, Michelle. Honored to be with you.